Hey everyone, welcome back. One of the coaches of Ungar Academy here, and today we're going to be talking about how to build an opening range breakout trading system on Ethereum. Now, since we systematic traders are always looking for new ideas for our trading, today we're going to see a trend following trading system that will enter the market once a certain percentage threshold has been crossed. But before we begin, as always, I invite you to please subscribe to our channel. Click on the notification bell and leave us a like to support our work. We really appreciate it. Thank you so much. Hi, we are the Ungar Academy, and we teach traders how to make money in the markets. Our founder, Andrea Ungar, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Alrighty, so let's start with some practical theory. Let's call it that, on this type of trading system. The rules are very simple. As you can see here, I've loaded a 30-minute chart of Ethereum with data from Binance, which is an exchange that requires an account to connect the API with multi-charts. I've already uploaded a strategy with some inputs that have already been optimized, and also an indicator, but we'll see that later. The rules of the strategy are, as I said before, to wait for an upward movement to enter long. This movement is calculated starting from the open of the session, as for example in this case here. You can see that the market has opened. From the open level, we'll calculate a percentage and add this percentage to the open value. If the value is exceeded, then we'll enter the market. Now let's take a look at another example. Here, for example, you can see that the market has made this spike. It didn't break through the level. In this case, we'll wait for an upward movement of 4.5%. You can see that here it hadn't touched the threshold. Here instead, it passed the threshold, so the strategy entered the market. Let's take a look at the strategy script now. So I've set 3 inputs. The stop and the target are set, relatively at 5 and 20% from the strategy entry price. I know that 20% and 5% may seem quite a lot, but let's keep in mind that cryptocurrencies tend to make large fluctuations, so we need to be a bit more flexible when we set these kind of settings on these markets. And then we have the last input, which is the one that will determine the trigger, namely the entry level of the strategy. This input is set at 4.5% from the opening of the session. Then 2 variables used to calculate the stop loss and the target. Stop loss will be calculated in this way, so starting from the entry price. If I enter long and I want to put a stop, I'll have to subtract a certain value from the entry price. Therefore, we're going to calculate, as I said before, a 5% from our entry price. As for the profit target, the same exact concept, but with the plus sign. Because in order to close a bullish position in profit, we'll have to sell at a higher price than the entry price. In this case, 20% higher. Then we have the entry conditions. We simply want to skip the first 2 bars of the session and don't want to trade at the very last bar. We only want 1 entry per day, so not multiple entries. And then, as I was telling you, we have the trigger condition that once that the close of a 30-minute bar is greater than what? Then the opening of today's session plus itself times a percentage, which in this case will be, as I mentioned before, 4.5%. If all these 3 conditions are met, namely the time window, the market position condition, and the trigger level, then we'll buy at market. For exits, when we're in a bullish position, we can close substantially at the low of 2 sessions ago. So if the market, I entered long, if the market were to go backwards, which can always happen, then should the market touch and break the level of the low of 2 sessions ago, I'll place a stop order and close the position. Then we have, as I mentioned, the stop loss and the target. So these are the 3 types of exits, and we're going to look at them on the chart. So here we are back in the chart. And as I mentioned, we have different types of exits. For example, an exit called LX low will basically place a stop order on the lowest low of the previous 2 sessions. And in this case, it could be this level. You can see that it closes right near this level. This exit could work sometimes as a trading stop, sometimes as a break even, sometimes as a stop, but not as large as the highest stop loss, which is, for example, this one. We also see this example here. And here another LX low, and you'll see that the level is equal to the lowest low of 2 sessions ago. A definitely useful tool to debug and to help us understand where our trigger level is this indicator that I created. you can see that it pretty much always identifies 4.5% from the open. It's nothing very difficult, we saw it earlier. We simply brought back a few conditions from before and then had this level plotted for us, which is nothing more than our trigger level. The results of the strategy are these. As I mentioned, we only enter long. The equity line looks very good. The average trade is also very positive, $128. In this case, I've set from the multi-chance properties to buy for each position, for each trade, $10,000. And these are the results. So $128 on $10,000 means that we have an average trade of over 1%, 1.28%. Drawdown. The drawdowns are certainly there. We can see them here. They're also very deep at times, but certainly less than the buy and hold strategy, which certainly would have produced very different profits, but also very serious belly aches. Like these stages of 2018, but also recently with the collapses that occurred following the outbreak of war in Ukraine. So surely a strategy of this type, while entering only and always in a bullish direction, was able to protect itself in some way from very high losses. While instead, for example, with a simple buy and hold approach, we would have faced even higher losses. Let's take a look at the year-to-year results as well. And as I was telling you, 2018 is positive. You can definitely see that there were losses. The number of trades was very high because clearly the volatility during those years was very high, and consequently entering on percentage movements, you can see that not all years have a fixed number of trades. Let's just leave 2022 alone, which is only just beginning. All the other years have varying numbers of trades in any case. The more volatile the year is, as for example 2021 and 2018, you'll see that the strategy will have many more opportunities to enter because clearly the market gives more signals in that sense. All years have been positive. Now this strategy, we could say, is still somewhat unrefined. It could be improved, add some conditions, some entry filters. You could also try to insert the short side as well. It's much more difficult and more complex because we would be trading on a slightly unfavorable ground. But in any case, there are some possibilities. And if you are curious, hey, you can discover many, many interesting things. Well, we really hope that this video has been helpful to you. If there is someone among you who is interested in the world of systematic trading, I'll leave a link in the description of this video from which you can access a video of Andrea Unger. Or even get our best-selling book covering only the shipping costs. Or even book a free call with a member of our team. If you liked the video, please leave us a like. Subscribe to our channel and click on the notification bell so that you can stay updated on the release of all our new videos. And with that, we will see you soon in our next video.